Okay, what is going on? Let's see. Right, okay. Sorry guys, we had some technical issues, so yeah, hopefully we should be live now. Let me just try something. Right, welcome everyone to the first ever TopstepTV London session. We do have some numbers coming out in about 25 minutes or so. The ZEW sentiment, which might be a catalyst. But we're going to be talking about how to approach the London session in general. And which products might be suitable for the London session. We still don't have Eurex, obviously, because we are working on getting Eurex into Topstep. But in the meantime, we do have a few other products that we can use that might not be as crazy as they are during the New York session, but still useful. Now, the problem with DAX and Eurex is that they're trying to work out how to do the conversion of the tick value, because obviously the Eurex has a tick value in euros and our dashboards are in US dollars. So obviously we need to make sure that that is working correctly before we can get it in. Now, the first step that I like to do whenever I'm deciding whether a product is actually good for trading London or not is to look at the average range for what I call the short London session. So I take the open and then I cut it off at effectively the active trading hours beginning. So for something like gold, that will be 8 a.m. until 1:30 p.m. my time. I am in London. And then I look at whether it has over 100 ticks or not. Anything below 100 ticks, it's a very, very quiet market, and I just automatically exclude it from the potential for the London session. Now, the only product that really moves reasonably nicely for London session that we have is gold, but also platinum. So we might have a look at a couple of those. Crude oil right now very quiet for London on most days, so we are in the summertime as well, so that doesn't help. And let's have a look at some levels in gold then, while we wait for the ZEW numbers to come out. Gold is opening with a bit of a gap, so another feature of London is that it frequently does these sort of partial setups. So even if you have a gap fill, it might not make it all the way down to the actual value high or the range from yesterday. It kind of stops midway. So I am always careful that we're going to run into a range bound day, because it is an out of hours time for this particular product. So we can't expect a super crazy movement that we normally have during regular trading hours. So that would be step one. So looking for the average range of London to exceed 100 ticks. If it doesn't, just throw it in the bin. The second thing is that you will have a lot more range-bound days than usual. If I use my little backtest mode on my charting platform here, you will see as I start to go back, there are quite a lot of days where this blue extension shows up on both sides. Now, what this is, the red box is the first hour of the trading range. For any good momentum moves, you need a single-sided extension to just kind of keep going. But you will see on a lot of the times, you just have a range. The first hour trading range, aka the initial balance, gets extended to both sides, right? So that's not great. And that happens a lot. A lot. Like even on DAX, it happens more often than it should. So, yes, that's a good point, Savage San. You said I trade NQ during London and Asian session by sizing up as per ATR. That's one way to do it, but I am annoyed when NQ that moves a million ticks for NYSE gets stuck in an 18 handle range. That's a very painful way to trade. So, at this point in my career, I kind of want things that move pretty smooth. And I don't really want to nitpick more than I need to, if that makes sense. So these are some of the ways to figure out whether, something is suitable for London trading. And NQ, I looked at it in preparation for this. In the last 2 weeks, we maybe had like one day where it moved pretty well. Over the weekend, we obviously had some risk events. That's going to put a little bit more pep in the step there for equities. But generally, NQ tends to move about 18 handles on average for London. Not great. So I do stick to gold and DAX when I can. But while we wait for DAX, let's have a look at these levels for today. Let's go up to the daily chart. Now, my process, whenever I'm trying to figure out where I'm going to get involved in the market, is to start from a larger time frame, work my way down. That's something that you've seen many people do. But I have probably about 3 different things that I look at, and I also want certain events to happen at a very particular time of day. So the first area that I'm looking at is the 2448.5, which is a supply level, meaning sellers. So supply, resistance, however you want to put it, it's all the same thing. But basically, because we have a round number of 2450 somewhere around there as well, that might be a fairly good area to get involved with, and everything is going to be a zone. So I'm just looking on Topstep PEX on the ladder, what we have around those areas. So as you can see, we have some liquidity at 47.5. So we have about 50 contracts there. And then if I start moving up, we definitely have some interest around that round number. So there's some orders sitting there, 58. So yeah, that's definitely going to be potential for a draw or to liquidity. And on the downside, I do have the value high and the Asian high. So now we're dropping down to that intraday time frame. I saw where I am, how close I am to that reversal area, and that's now marked on my chart. And now we go down to see the next orientation point, which would be the Asia low. That's not too far away from yesterday's value high, which is the edge of the distribution curve, aka the value area, which represents most of yesterday's business. So it's that curve, when prices start to distribute, that is where you get those value areas that Hogue and I love using. And that's located in the zone from about 24, 23 all the way up to 25 to kind of encompass that Asia low as well. So let's plop a little orange rectangle there. In the middle of all of that, just in case we don't get quite enough momentum, we do have the average session range low at 24.33. So if I do manage to find any sort of movement, that will be an area to look out for as a target, maybe target 1, and then if we really continue to push, then we have the possibility to go all the way down. So let's have a look at some questions. This will be an hour. Yes, we did start a little bit late because don't know why the stream key on the first run didn't really work. But yeah, and then it started working. So, gremlins on a Tuesday. Let's have a look at some questions. I also want to thank Gabe and Danielle for being here with me. I know that the Gabe hasn't slept. I was just about to ask him whether he got a little bit of shut-eye, but no. I actually slept really well, so I'm all bright-eyed and bushy-tailed. Oh, Gear says, I trade YM in London, as it is used a lot by European investors. Yeah, I can believe that. We can look at YM. Let me find that. Just see what sort of ranges we're looking at. YM is generally pretty liquid, but less crazy than NQ, and generally likes to follow some pretty nice levels, but it does V-shaped reversals very frequently. So buy and hold, maybe not the best strategy there. Let's have a look. London range. Right, yeah, 143. That's actually over the regular trading hours range, which is very interesting. That sometimes happens in DAX where it goes into this extended move where it effectively overshoots its own range for London during New York. Not very often, but every so often you will see that shift, and looks like YM has something similar. I see someone said there is. Somebody said they went long DAX. I would probably hold off until the ZEW numbers for DAX trading, because that is a reasonably bouncy release. So you don't want to get caught up in that. So whatever you can grab up until that. We're still inside the initial balance on DAX as well. So again, another little thing to take note. Let's go over my process, because I think it's going to be a little bit clearer if you guys understand how I come by these levels and what all of the steps that I take myself through are. So here's a very high-tech document. It's just a Word document, nothing fancy. I usually like to write down what the product is at the top here. So BGC in this case, because that's what I'm looking at right now. Then I like to look at the weekly and daily chart, larger areas of support and resistance. I like to use supply and demand for this, and I don't really tend to use supply and demand on lower time frames because I find them unreliable. So I prefer profile, and I prefer some more simplistic timing methods, which I'm going to get to in a minute. But yeah, so I start on that larger time frame, weekly, daily chart. I know that we're near all-time highs here, and then daily supply coming up at 24.48. I'm also just going to remind myself, round number 24.50, right? So that I don't forget. Then I go down to a 4-hour chart. I do the kind of same thing. I look at where we are, whether we have any issues with opposing levels hitting our, if I want to do a gap fill to the downside, for example, I don't really want to be running into any opposing levels, quite obvious levels that have caused originating moves to happen. So that's usually a very bad idea. I want to look for asymmetric opportunities. So anything that will allow me to limit risk and to get a slightly bigger risk reward. We can talk about system design as well, because I think a lot of people have a negative risk reward or 1-to-1, but their hit rate is not really matching that. And, I think that causes a lot of hindrance in your results, a lot of frustration. So we can get to that if you wish to. So the next thing that I look at is the market profile related reference points. So one of them is what I like to call the open sentiment. Whenever we open above or below yesterday's business, so we're not in balance, we've actually gone outside of balance, typically those sort of days tend to give way to more momentum type movements. They tend to be easier. But there is a little catch. If the gap is too large, that is usually some kind of a repricing event from something like CPI or PPI. And when you see that, unfortunately, that means you're probably going to end up in a bit of a hangover day, like Anne-Marie likes to say. Range bound, not really going either side. And then you need to just wait until both sides of the initial bounce are popped and then just play the range. But if you have a reasonable gap, like if it's not too large, we're within about 60 to 100 ticks of the value area from yesterday, you can run that gap fill trade. And that's actually a beautiful trade that works out pretty quickly in most cases. Sometimes I've been in those gap fills for like 10 minutes, which is pretty short for what I do. And it's done. Like you get your 70, 80 ticks and you're like, oh, okay, that's now what do I do now, right? Twiddle my thumbs. So if we have a gap that, like I said, it spells some sort of imbalance. So it's a little bit easier. If we're opening inside value, that tends to be a bit more difficult, even though we can have value breakouts and a continuation. We've seen that on NASDAQ and ES last Thursday and Friday, because we open inside value, then pushed outside. But for the most part, I want to see some sort of a gap. You know, I'm not too happy trading inside days all the time because they get a bit painful after a while. I also look at the initial balance size. So do we have a normal size, or are we kind of overshooting that average session range or average daily range even? If we have some big release that just smashes through all the levels, and that kind of tells me whether I should be looking for maybe a fade of that level rather than going with the massive momentum, because we've already exhausted the statistical range. And that can mean either a larger volatility day, but most of the time it's going to mean that the release that we had, that was it. They made their money. They're out drinking beer at a pub. Right? They're not sitting there trading, and we're just left to pick up the pieces and to just play the ranges that get established after the major release. So that's one of the ways that I can sift through things. And, I use the ADR, the ASR, which is my kind of twist on ADR, using just the regular trading hours for the session that I'm trading. And then from then onwards, I just create the hypothesis. Where do I want to be a buyer? Where do I want to be a seller? Some levels are sort of lines in the sand, either or. So if we go to the level, reverse, you go reversal trade. If we go through it, you go momentum trade. But for the most part, my levels will be single-sided. If we reach ADR high, that means I'm going to be looking for shorts. If we reach value high from the outer side, I'm going to be looking for longs. Dolby yesterday, when they were doing the strategy lab with Anne-Marie, he was talking about how every time the market goes outside of value, he kept trying to short it and long it. But that's not, there was a little bit of a wrong way to look at it, because if we're above value, that doesn't mean that you are shorting it all the time. Sometimes when you're slightly above value, that means that you're above the range from yesterday. And that means it's strength. There's strength in the market, right? So there's one thing about the gap fill, but there's another argument for opening just at that level of yesterday's trading. That's bullish, right? So there's subtleties in using the profiles that are not immediately obvious unless you've had somebody to hold your hand and teach you through it. Okay, so all right, so we've got 6 minutes until those LEW numbers. Let's see what happens there. I'm going to take a few questions. Let me just look at... Yeah, okay. What times do I anchor my GC for the session volume or TPO profile? So I anchor it for London. I'm going to do it in London times. You can then flip it to wherever you are in the world. So I go from 8 a.m. London time to 1:30 p.m. because at 1:30 p.m. you effectively have the COMEX session starting, and that's when the craziness begins. So if you're just looking to sift out like what's happening for the London session, those are the hours that I look at. And then obviously we have the next session, which is from 1:30 up to 6:30 p.m. my time. If you want to be a purist and use the old open outcry hours, but I actually like to extend the entire session to the end of the New York electronic session all the way up to 9 p.m. my time, because sometimes gold tends to move even after that settlement. All right, can I ask why you didn't start the stream at London Open at 8 a.m.? Because nothing much happens for London Open. I don't trade the London Open. I think it's very boring on most days, and I don't want to sit here not having any trade opportunities and then waiting for the initial balance but then ending the stream. So for me it's completely pointless to do that. Another little problem in my chaotic life of 8 dogs, a lot of my dogs go to doggy daycare around about that time, and I just simply cannot sit and not greet the dog walkers that come and pick them up. We have to help them because it's just one girl that comes, and if she has to deal with 8 dogs, that's just not very realistic. So I do have a chaotic life over here, which makes the scheduling slightly difficult. But at the same time, like I said, I don't trade the London Open. Like I don't even sit at my desk until 9:30 typically. Sometimes I don't even sit at my desk until 10, 11. If I look at it and I see nothing's happening, then I walk away, go live my life, and then come back. So that's the reason. The charting software that I use, this is AMP Futures MT5, actually. I know that a lot of people are against the MT5, but I've used it for many years. It is CQG data on the back end, which is why you see all of the futures products. I do use Topster PEX as my execution, and I also use Ninja. So I kind of use all of the platforms, but I'm a little bit set in my ways at this point. So I am very, very used to what the MT5 platform does and how it can measure everything super easy with a click of a button. Somehow I find the Ninja Trader a little bit clunky for that. I do like Topstep PEX, but they don't have some of my specific indicators. All of these indicators that you see on my chart, they're actually my indicators. It's my company, and I spend a lot of money getting these commissioned. As it turns out, the guy who did the software architecture for them ended up partnering with me many years ago. So yeah, but before then, just like anybody else, I had to commission the products and pay a lot of money for them. And then the whole story behind MT5 is that the CEO actually approached us because we kind of put out some products on the market. I think it was like 8-9 years ago now. And he looked at what's around with Market Profile, found us, and then actually approached us. So he was like, oh, hey, can you improve this? Can you improve that? So in many ways, the reason why Blatek MP looks like it does today, with all of our lovely overlays and graphical things and little summaries, is because of the CEO of AMP. So there's that. And I've just stuck with it because I think it's a great platform. We made this awesome back test on the chart, sort of time machine, so to speak. And it's awesome because I can see exactly how the levels played out, what the profile looked like, where did the average session range get exhausted to, did it react, did it not react, how much it overshot, and I don't have to use anything else for that. So like I said, I'm a bit set in my ways because they are my indicators and I'm obviously quite partial to them, but at the same time they do automate the process from quite a few hours down to a few ticks. Okay, Jesse James says, good morning, Dee. My strategy during London session is to enter the high or low from the 2 a.m. hour box and generally works well. Any thoughts? Yeah, so this is what I would refer to as the Frankfurt fake out. So what typically happens is that Frankfurt is a very small exchange. So when Eurex opens, there's a little bit of volume there, but typically then it's not that strong to cause any major problems. So when London opens, you typically get a reversal of that. And I call that the Frankfurt fake out, Frankie fake out for short. So yeah, and it does work well. I totally agree. That is my empirical experience. Yeah. Kingpin says, Dee, what are gaps? The gaps are when we open either above or below yesterday's low or high. However, I like to use a distribution curve rather than just a simple low or high. So we open outside of that, above or below it, you have a gap potential. How do I determine the value ranges from the Asian session? We determine it just like any other value. So you take, effectively you're counting these ticks above and below the widest point of wherever the ticks happened, and then you kind of add them up until you reach 70% or 80%. Some people like 67.2, but I generally use 70%. I think Robert uses 80% for his value areas, but it's effectively the same kind of calculation. It's just down to the hours and the time that you're going to use for those. But yeah, the process is exactly the same. Undauntable says, could you explain what the brighter blue boxes on the chart are for? They are the extensions of the initial balance, and they also show the value areas whilst they're being created, even though I don't use the current day's value, because to me it's like using trying to read an engulfing candlestick, and yet the candlestick is still not done. Like we're still in the same time period, so obviously you don't know how it's going to end up. So I never really know why some of the YouTubers rely on that, and then every 30 minutes that gets recalculated. So I'm like, well, what is the use? But yeah, they're basically extensions. It just gives me an idea whether we have a single direction day, whether we have an extension at all, or whether we might have a neutral day type with extensions on both sides. So it's a very good lens into the market behavior. Like anything, market profile is just another lens into what's happening. It's not the be-all and end-all, but a lot of us who use it find it extremely helpful for situational awareness. So rather than me just going, oh, I think this is a range-bound day, I can look at whether there are extensions of that first hour of the trading range and then go, yeah, it's a range-bound day. Okay. So it just makes things, a little easier. Not easy. Trading is not easy. We all know that. Carl Hungus, the meme lord, took a copper long from 449.30, looking for price to return to the daily open. What do you think of copper during London? I did look at copper when you said that you trade it. Let me go to because I don't think I've got copper on my... I don't think I've got copper. What is a copper symbol? No idea. So let me find that. Copper futures. I did have a look at it at one point. I've just forgotten the symbol now. HGU. Okay, so H. There it is. Let's have a look at the clean chart on Topster PEX. Might get rid of some of these domes here. Let's get rid of crude oil for now. Go up to the 30-minute chart. This looks similar to platinum to me. So, but you took it at 49. Okay, so Carl, so you're planning this as to hold it for a few hours? Is it a scalp? Is it a fade? I mean, we could go into a failed auction, I suppose. So that would be a good setup. I don't think it's that lively though, because just looking at the movement, yeah, it seems like not that many ticks. But again, if you're somebody who doesn't mind waiting for a few hours, I'm not a scalper, but I'm not exactly someone who holds trades for like 6 to 8 hours either. So I'm kind of somewhere in the middle where my average trading time is about 45 minutes. So that ZEW did absolutely nothing. I'm just looking at it and I'm like, oh, okay. So DAX did nothing. Nothing. We still don't have an extension of the initial balance in DAX. Ideally, I would like to see some sort of a gap fill in DAX. And gold, same thing. We're still very range bound. Now, it is summer trading. I was hoping that this kind of Trump business over the weekend might give us some more movement during London, but we're very range bound at the moment. So I've got my couple of orientation points. If we end up being in a failed auction down, so if it tries to go higher, then it comes back into the range, there might be some opportunity for a short in gold. But yeah, that's only valid up until about like half an hour before COMEX begins, and then just get out. But yeah, so it's right now I'm not seeing any great opportunities in my desired products. Let's see what platinum was doing, because I know platinum was trying to go down. Does that look better? No. So that's gone into a failed auction. So Carl, if copper looks anything like this, and I think it does from just what I've seen. This might be a good trade. It's not the biggest trade because the initial balance on platinum is about 35 ticks, and it didn't look too much bigger on copper either. So yeah. But yeah, I mean, longs, obviously we keep going long and long on metals. And I know that you're bullish on metals, Carl. So yeah, I hope it works out for you. That'll be good. I do think copper is a little slow during London. So maybe I would look at platinum. Platinum actually moves 135 ticks for the London session. But it is a very thin market, so you might have to eat up like a couple of ticks spread. All right, so American Pride says, "Hey Dee, I've been looking at failed auctions a lot more recently. I have trouble with entry and seem to get whipped out. I know you love to use that, so how do you enter after a failed auction?" I'm gonna guess here that you trade NQ. Just, spitballing. So NQ is very whippy. Getting into a failed auction in NQ usually involves some kind of a stop run and then front running that idea. It's not easy, okay? When I'm looking at my gold failed auctions, I typically have an orientation level outside of the initial balance. So I generally don't like to get involved in the failed auctions in whippy products like NQ and even RBOB after the fact. So you have to have a hypothesis with a high probability level that will lead into a failed auction. Now, obviously, that level needs to be pretty strong. I like to use either average daily range lows and highs on NQ. If it's average daily range low, that's a very high probability setup because you exhaust the entire range to the downside, pop the initial balance to the downside as well, and then you fail that. So that goes with the trend from a high probability level into a failed auction. So again, failed auction for whippy products cannot be something that you do after the fact. And again, if you have a failed auction that you maybe didn't catch on time, if the market falls all the way through to the middle of the initial balance, there is no entry there. So the failed auction is already underway, you missed your train, okay? So there are subtleties, again, in the failed auction setups that we have to take note of. One of those being that if the market goes too deep it fails too deep into the initial balance, your risk increases massively. And then catching that is horribly difficult unless you look for a retracement, which on a lot of the failed auctions you never get, especially not in NQ. So yeah, try to maybe use another level outside of the initial balance as a reversal, and then use the failed auction sort of as a situational continuation of the trade that you were looking at from outside of the initial balance. So try that. Do I have a playlist? A playlist. What is a playlist? Oh, you mean like have I done playlists for Topstep? I've mostly been on fast markets and on markets talking with Dee up until this point, but we can absolutely work to create these sessions, these London sessions, into a future playlist. So maybe we can do a theme, a topic for each of them. So yeah, I mean, for the next one, for tomorrow, maybe we can we can like collate some questions and stuff, and I can choose one of them, and then we can just drill into those setups pretty deeply. Could I explain what a failed auction is? I still struggle to understand it. In the simplest terms, when you look at the first hour of trading of any active exchange, for London, this will be between 8 and 9. That establishes a range that we call the initial balance. For the failed auction setup, you need the price first to go outside of that range. So not while we're still inside it. There's no failed auction there. It's just still inside the range. Once the price goes outside of the initial balance and then starts to fail, basically returning into the range, so there's no commitment to taking it even further, there is a chance that the market will fail that move. So that's what we mean when we say, we have a potential for failed auction. But like I said before, there's a lot of subtleties involved in making the failed auctions work for you. If it was that easy as, 30-minute candlestick closed back inside initial balance, which is the traditional trigger for the initial balance. So you have a 30-minute candle that exits the initial balance, comes back to it, closes inside it. Traditionally textbook, that will be your trigger. But it's not that easy, because what if it fails completely? What if it fails right on the nose of initial balance high? Is that a long or a short? Are we failing the auction, or is it just a slower upside auction? So, there's so many things that you can put yourself into trouble with. And that's why I say have another level outside of the initial balance, which is a market generated information, right? So it happens throughout the day as the day develops. But if you have something like, let's say, VWAP, and we're looking at the failed auction at VWAP, now you've got something, right? So it's like we're looking for a reversal from VWAP back into the initial balance. So that's your setup. Okay, so hopefully that will make it a little bit clearer for you so you can start using them a little bit better. Cami Capital, hello. What's up, man? We need to get you on here one day. It'll be fun. Okay, range bound day. In the first hour of trading, is that standard for global session on or when the markets were traded on the floor / pits? The regular trading hours that we usually reference, like Hogue, myself, Andre, it is the former open outcry pits. So yes, it will be, I mean, technically for COMEX, if we're talking gold, it used to be 8:20. I always get confused with the time zones, man. So 8:20, I think it was Eastern, and that was 7:20 CT. Do I have that right? I need to have a look at my computer. I always, I'm working in 3 different time zones. It's a little bit difficult. So yeah, the former open outcry pits, the first hour of that trading day. The thing with gold and platinum and some of the other things they used to trade on COMEX, because a lot of platforms wouldn't allow you to start the candle at 20 past. Several years ago, there was a little bit of an understanding in the CME that we're going to make Globex start, COMEX start as well. So just kind of discarding the 10 minutes that we used to have extra before. And then, like I said, if you want to be a purist, you can just cut it off at the old open outcry pit close for the entire volume profile. But the first hour, it's always going to be from the start of the regular trading hours and then wherever that falls. So for the cash session, that's typically 9:30 Eastern to 10:30 Eastern. So that's when the initial balance closes. And in some cases, I mean, you can even have that initial balance go even longer in some products, especially if nothing happens. Like bonds, I think, have that sometimes where the entire 90 minutes can be an initial balance. So, there are definite differences between different products. For the London session, my time, London time, it is from 8 a.m. till 9 a.m. Anything that happens after, that is when you would expect the initiative activity players, which is the big institutions with big pockets, to start making their mark. But we don't have those yet today. So we didn't miss anything by starting this nicely, slightly fashionably late, if you want. But yeah, this is the time of day that I usually look for my setups. Unfortunately, today we still don't have a setup, even after the ZEW release. Come on, markets, move. But yeah, this is the London session. This is typically what happens. There's a lot of waiting around. And some days you might just, you might be better off doing something else. Come back after another hour. If nothing is developed, then you can just shut it down, go do something else, and wait for the New York session. But be careful if you're going to trade through 2 sessions. Something that I want to point out is the mental capital. So the problem with people sitting there for 12 hours and just not moving their butt from the trading desk is that at some point you're going to get awfully tired. Like today I have another stream of my own, and then I'm doing market stalking with Dee at 7 p.m. my time. So it's going to be a long day, which means that I have to make sure that my mental capital is saved for all of those different parts of the day. So if you're going to sit here through both London and New York session, I don't advise that. You can spend 90 minutes for London and then go and have a good old rest, like for about 2 to 3 hours. Then come back for the New York session. And for anyone who's actively trading across a couple of sessions, this is a good practice to have in general. We can talk about building good habits. But yeah, if you're going to be a professional trader, you can't burn out in 3 seconds. If you want longevity in this game, if you want consistency, mental capital and preserving your mental capital has to come into that equation. Okay, Mordecai says, this is great stuff. I'm learning so much. Thank you very much. You're very welcome. C4, good evening, everyone. Good morning. It's morning over here. Finally made the transition from Forex to futures and was wondering, how do you take partial profits trim on Topster PEX? Any advice would be helpful. Yeah, so the way you do that, so let me maybe kick off. Let me see what's going on in gold so I can get some sort of an idea. Let's just try like a little short there. So I'm going to enter, this is just a combine, so I'm going to enter gold with 2 lots. Sorry, that's crude oil. It's these bloody lights, they're so bright. Okay, there we are. So now I'm in 2. I'm just going to increase this so that I have some space. Well, if you lower the position size here, it's going to say buy market. So if I'm selling, so there's a sell order, short, for 2 contracts. If I now want to exit one, I have to change the position size and then click buy market. And that's going to take me out. So now I'm only short 1. Okay, so that's one way to do it. Second way to do it is to plop a limit order somewhere. If it goes into your profit. So for example, if I want to get out with 1, you right click on the chart and then you go limit buy for whatever partial that you want to do, and then you can just keep that in there. Once the price reaches that level, it's going to trim 1 lot out of it and leave the rest. So hopefully that helps. It's very easy. Like Topstep PEX, it's such a clean platform, man. Like I have never had a faster learning curve on any platform than Topstep PEX. And the fact that it's like just on a browser, it's great. I always say, you usually have to do like a rain dance to connect your your market data everywhere. And yet Topstep PEX, you just log in, it's there, it's done. Like, come on, we've got other things to do in life, right? All right, guys, so let's take a few more questions. We got about 10 minutes left in the session. Unfortunately, not that much happening. I just kicked off this short to demonstrate how to do partials. So, it does have some merit with me expecting a failed auction here, since we haven't really moved much. But yeah, I'm going to close that and then look for the actual pop of the initial balance before I do anything. And again, it looks like it might happen around about the usual time when it happens, 2 hours into London. So yeah, okay, let's have a look. I'm just going to check my messages here. Do I use hotkeys? No, I don't use hotkeys. I don't need anything that makes me trade faster. I'll be completely honest with you guys. So I am somebody who, back in the day when I started as a prop trader, I was actually quite a big grasshopper, as I like to call them, when you overtrade and you try multiple trades from the same level, and yet the market is either not giving you the movement and you just got to keep doing it. I'm a pretty stubborn individual, so I'm like a dog with a bone sometimes, and I needed to work very hard on that part of me. So if I had, I have a stream deck, right? So can I actually show you this? Unfortunately, I can't show you it because it's in my desk, so it's like very clamped. But I have a mini stream deck here. I would never use it as hotkeys. I know some people are like, oh my God, I love hotkeys. To me, that's like the worst thing that could happen for my trading. I need to slow myself down quite actively. And I have been quite successfully able to rein in my overtrading, grasshoppering habits down to about 5 to maybe 10 trades on some days, but that's not on one product. Keep in mind that I trade multiple products. If something doesn't work in a couple of trades, I will move on to another thing that might look a little bit better for that time of the day, but I will not be using hotkeys. Like I said, to me, that would be a complete disaster because it would just make me click buttons. I'm trying to click buttons less, not more. So, yeah. But I can see how they're useful. If you just want to enter the market pretty quickly, hotkeys can be fine. They're just not for me. No, it's not Ninja, it's Niranjan. I'm so sorry about that. Totally butchered your name. D, the distribution curve from yesterday for the London Open is based on the London session or the US session? Okay, very good question. Always the same session with same session. We do not mix and match because they're completely different players for both of those sessions, right? You have one market behavior, institutional players with certain depth of pocket over in London, and then you have the crazy people that trade the New York session, so we cannot mix and match. You're not going to get that much out of it. Maybe if you're like in a trending move or something to confirm that we're still trending massively outside of it, but those happen at a rate of about 8% when you look at the larger sample size, not just like looking at the last week, right? So those true trending moves, they just don't happen that often. So if you're going to mix and match, it's going to give you a skewed outlook of the players and what they were doing. So when I'm trading London, I only look at the London value area from yesterday. If I'm trading New York, I'm only looking at the value area from New York from yesterday. So do not mix and match. Same thing if you do Asia. Do not mix and match. That's something that we tested to death because I don't know how many of you know, but I do have a little software development team and we do mechanical algorithms. So we were able to test a lot of the ideas that I use, that I talk about algorithmically. And actually for about 2 years, I didn't even trade like manually myself. We were just running a whole bunch of little algorithms that were based around a single idea. And that worked great. But then I kind of missed it. I was like, what am I doing? It's just nothing, just monitoring algorithms, and I just found it a little bit dull, to be honest. So I wanted to come back to active trading. It's something that I love doing and I find huge passion in. So we still have those algorithms, probably have about 27 of them at this point, and each of them is based around single level, single trade idea. We do not sort of mix and match that either. But yeah, we're using just the session to session, value area to value area for the same players. So London to London, New York to New York, Tokyo to Tokyo. So that works really well. When is the Topster PEX Mobile going to be ready to download? I have no idea. Why would you think that I would know that? You need to ask MP. For now, I know that Topster PEX is mobile responsive, and I have actually used it on the go because every few weeks or so, I like to go and visit my mom, who still lives in Belgrade, Serbia. So I'm on the go, right? I'm always doing stuff with her, and I still want to do some trading. So I look at my normal charts, I plan out my levels, and then I have some alerts that kick off to my phone whenever the level is reached, and then I can have a look at it. So I kick off a trade, and then I can manage it when I'm out and about. So that's already there. When they're going to be bringing and if they're going to be bringing Topstep PEX as a true mobile app, that's another thing. So you need to ask Mike Patak. GQ Cartel says, hey D, if you're new to futures and can only trade London, what markets are best to learn? I would really say DAX. Like I said, we're working on getting DAX into Topstep, but it is going to take us a little bit more time because of the euro to USD conversion. But DAX, if you're trading just your own account, I love it. It's been like, apart from crude oil, it's been my bread and butter probably now for about 3-4 years. It's very liquid. It moves most times. One number that I like to keep track of on DAX to make sure that the conditions are pretty good for day trading is the DAX version of VIX. Okay, if it goes over 17, that tends to bring beautiful moves. So it's called the VDAX, V1X or something like that, V1XI. So when that climbs over, you probably can't see that, when this number climbs to about 17, even like 14, 15, we start to get really, really nice moves in DAX. So keep an eye on that. Right now, we're kind of a little bit sub that number, which is why we're seeing some not so great movement, but it is July, it's summer, so, we can't really expect miracles every single day. But yeah, DAX is great. If you're trading through Topstep GC, gold, very good for London on most days. And yeah, so try those two markets. I don't think that any other... I'm just trying to think whether any other products move pretty nicely. NQ moves sometimes, but on a lot of the days, it's just so range-bound, man. Like, yeah, I really don't want to say, hey, go trade NQ during London, because you're going to be bored most of the time. But yeah, so I consider the London session to be 8 a.m. all the way up to the cash session start. So in my time, that's 2:30 p.m. So yeah, for me, that's the whole thing. But you do have the overlap. So again, time of day is a big thing in what I do. Typically, I expect a reversal after about 9:30, 10 a.m. So some kind of a failed auction. Then I expect to see some more movement as we move into the overlap and the pre-market of the US cash session. And that typically goes from around, I would say, 12:30 p.m., so maybe just after noon, and then all the way to the US session open. So there's definitely a lot more volatility and movement as we hit the overlap. But the true London session, I would say it's 8 a.m. until 12, and then weirdness ensues. All right, guys, I think I'm going to finish it up here. So yeah, I think this was pretty fun. The London session is going to go Mondays to Thursdays. So tomorrow I'm going to see you again, and Thursday as well. And then it's just going to be Monday to Thursday every day from 9:30 a.m. London time, which is 3:30 a.m. Chicago time. So yeah, maybe we can pick a topic for each of these and build a playlist as we go along, so that we can have something similar to what Hogue has done with his coaching sessions. I absolutely love that man. I think he's coming back, I think tomorrow, so that would be very nice to see him again. In the meantime, I'm going to sign off, so let's try to be less grasshopper and more market stalker as we head into the US session. And I will actually see you guys a bit later for Market Stalking with Dee on this same channel. Take care.